Welcome back to another episode of Property Auction Hunters, and today we are joined with Charlie and special guest Rod, and today we are going to be talking all about Home REIT. So, this is the headline that came out just yesterday in the news. Home REIT opts for managing wind down amid debts and regulatory probe. So, Rod, I know this is something that you've been keeping a bit of tabs on recently, and obviously it's been something that's in the public domain, but what's your thoughts in general about the whole situation, but also specific to now them looking to wind things down because their debts are really spiraling out of control and their income is basically starting to get much, much lower than what it was supposed to be?
I mean, it's amazing it's taken this long to wind them down, to be honest. It should have happened years ago. For people watching, I mean, if you haven't heard about this, Home REIT was a REIT set up for social housing and supported living. And they bought a lot of properties where there were enhanced rents through social housing providers and supporting living providers. Those enhanced rents were based on a level of support. And so they paid a yield-based value for those based on what the income they were receiving and what they felt represented that. Unfortunately, what they didn't do was look at actually the operators who were meant to be providing that level of support. And it seems as though there wasn't much due diligence done because there was a real mixed bag of operators in that. Not all were terrible, some were okay, but they kind of got taken down with everything else. And what ended up happening is the authorities went in and realised that actually they're paying all this money on these enhanced rent. And once they looked into it, they realised that there was no evidence of the support happening, which should have been to enable that enhanced rent. And so they stopped that. So that resulted in a lot of the operators suddenly going bust very quickly. And that meant that their lease obligations, or the money they were meant to be paying for the leases to Home REIT, suddenly stopped. And you found that this was a bit of a catalyst to everything else that came out. And then there's a few other moving parts in which really can only be described as fraud, to be quite honest. And here we are years later now, with Home REIT saying they're winding down, where actually I'm gobsmacked as to how it's taken this long, and I'm quite surprised that it didn't happen before.
2022, don't forget, you got the famous short seller that basically called all of this. Now, obviously, short sellers are famous for trying to basically bring it out into the public domain to try and obviously enhance their position on the short. That's the whole point of what they're trying to do. But this guy did a lot of research into basically all the research Home REIT didn't do into the providers, how much they've paid, the capitalization costs as well involved, because these guys were basically putting a lot of money into these leases.
Well, some of the other problems about it was there was really no barrier to entry of a lot of these properties that they were purchasing, apart from the lease. Now, the lease in itself wasn't really a barrier to entry because there was no use class changes. And so there was nothing to stop the person next door creating the same thing. And so their whole idea on the value was really fundamentally flawed there, because anyone else could go and set this up. There was no barrier to entry. And you found a lot of people, this is kind of around 2020, 2021, you had the Wild West of registered providers. And every Tom, Dick and Harry decided they were suddenly a for-profit registered provider of social housing. And that really unleashed this kind of, like I say, Wild West environment where really you've got a very specialist level of support going into vulnerable people's need that was not well regulated at all, and which has come crashing down. And this shouldn't detract from the fact that there is a massive need for this type of housing.
Yes. Yeah.
A massive need. But now everyone looks at this as a bit of a bloody con, and everyone's got their guards up, which rightfully so.
I think the concept of creating fixed income from residential properties, especially secondary stock, was a great concept. If they did it on, let's just call it sustainable rents, number one, and they did it on sensible leases as well, then I think that it could have worked in theory if it was backed by LHA, for example.
Yeah, exactly. The key is, I mean, the rents were sustainable. The problem was what they were paying for was not happening, i.e. the level of support for the enhanced rent. So absolutely, you're right. If it was done, well, the enhanced rent is done on LHA. It's LHA plus the enhanced level.
Yeah, but I mean, a base LHA, because you've then got a fallback position of if it can't be run with commissioner sign-off and all the rest of it, you can always run it as a standard,
Exactly. So what you're basically, they never looked at what might happen if this operator stops providing this enhanced level of support.
Yeah.
And that was the big issue, because suddenly now they've lost that income, they can't service their debts on it, and, well, not only can they not service their debts, the operator is not able to pay any rents because they've gone pop because they can't service their costs.
So this does seem like a British version of The Big Short, basically, where someone went to the research, waited a couple of years, finally now everything is coming down, but it was propped up for a couple of years, or people tried to save it.
Don't forget, some of these houses, not only were they not delivering the services, they were vacant.
Yeah.
I went and actually knocked on a minimum of 20 doors within my area.
There were some houses in South Yorkshire. There was like in Godalming, right, where it was supposed to be like a 15-bedroom, and it had been vacant for years. I think you spoke to some neighbours, and internally it was a dog's dinner.
It was a shell.
It was an absolute
and you
shell.
speak to the neighbours, and they'll tell you ever since it had been bought, it'd been stood empty, and these guys were still getting enhanced rates on these as well. So
this is no new story for the auction world, right? Because what happened in September of last year is all of a sudden, Allsop's residential went from 250 lot catalogue to 350 lot catalogue, and everyone, where the hell did all this come from? Well, 100 so lots were from this Home REIT, not directly. It was being sold by whoever was parachuted in.
AEW consultants came in.
They were parachuted in to go fix whatever it is you're able to do. Just stop the bleeding. And they've obviously, after a period of time, right, this is the stuff that's underperforming. This is the stuff that we know isn't operant. This is the stuff that we know was never converted. Let's just get rid of all of this stuff and try and repatriate as much funds back in to see if we can stem the hemorrhaging that is this.
But Jay,
this
that's
fund.
where the arbitrage opportunity for a lot of that stock, because traders have been picking up a lot of that stock, is you get something that goes into auction with one external photo, maybe from Google or maybe an actual photo.
Normally Google.
No internal pictures whatsoever, no floor plans. Tenancy unknown a lot of the time because they have no clue. You have a lease on it that needs to be surrendered within the next 3 months of you actually exchanging on it in auction. Yeah. And if it doesn't get surrendered, then they have to rescind the contract and give you back the deposit. So for me as a trader, there's an arbitrage for you to take a bit of a punt, a bit of a risk. If you really want to sort of hedge your bets, you might want to go knock on the doors, see what's going on, speak to neighbours. If you don't and you want to work remotely, you can do it. And basically then trying to get it into a position where you can get photos done, internal inspections, everything else, and put it back on the market. And that's what a lot of traders, they've been having a field day with
that's
this
the bread and butter, isn't it? It's buy on bad terms and sell on good. We bought something from LPA receivers. Commercial tenancy was missing. There was a page here or two missing. A couple of things. Knock on the door. Well, Piotr went and had a coffee. Knocked on the door. Solve those kind of problems. And then offer, instead of a 10-day completion or a 14-day completion, whatever it is, offer them a 6 to 8 week completion. Because what you're doing is you're making it easier for people to make an investment decision. You're supplying them with more information, not less. So even if it's a trader where they're not putting more documents in the legal pack, they're providing scope. This is what the internal of the building looks like. Here's a floor plan. Here's the CGI. Here's whatever. So it's creating that arbitrage is very, very efficient and very cost effective. And selling on better terms gets you a better return as the trader. So you're arbitrage, and then you're doing arbitrage plus by just improving the terms of the transaction. That's all it takes.
Sally, you tried buying a few things.
Yeah,
how did you find that?
I was just thinking, so the Margate one that I went to look at was two buildings, and again, photographed just at the front, full leases, said that it was full, said that it was income generating. And I went, and the door was literally open. It had been abandoned. There was like 2 people in flats. It was flooded. I mean, it was in the most remarkably poor state ever. And actually, it was 2 buildings next to each other. I thought it was a fantastic opportunity. Margate's really up and coming. I was ready to bid on it, and it went so.
That was guided 500, right?
It was guided at 500. It sold at
Your max
one-
was what?
Oh, I was going to be about 800, something like that. I think it sold
1.7, 1.8.
It was crazy.
Those are the ones
It was crazy.
where you don't want to be buying because people have not the actual condition internally, especially a lot of people might not even view them or actually go see them, is not going to reflect on people's perception of what it's valued at. So they're probably not even pricing that in whatsoever. So they probably think they are income producing.
The refurb, it wasn't income producing. There was no tenants there. I think there was 3 tenants in the whole building. It was.
But on paper, it's income producing because it's got a lease.
Exactly.
Yeah, although that's going to be surrendered in the next 3 months.
Yeah.
After
So
exchange
it
anyway.
was. I was shocked at what that went for.
This episode is sponsored by Roma Finance, a specialist bridging and development finance provider. If you've got a property that you've just bought or you're looking to buy and you're looking for specialist finance needs, click on the link in the description below now and they will take you all through the application process, which is a streamlined, seamless application process so you can get your funding as quickly as you need, especially if you're looking for them within 28 days.
And the refurb on it must have been, towards 750.
So what do you guys think, like the original investors in Home REIT, the people who invested in it, like what they're gonna get back?
Nothing.
No.
Terrible.
Not even a pence on the pound.
There is a big lawsuit going on at the minute, and clearly because a lot of them are institutional investors as well. Let's be honest, it's not your Tom, Dick, and Harry. It's really big corporates, institutions,
Pension funds,
Scottish widows. Obviously, we know is probably one of the biggest ones. I think what they'll end up. I think this will be a long, drawn out process. I think what they'll end up trying to understand is basically what went wrong when, trying to obviously piece everything together. And I think eventually it will be down the line when everyone's already, effed off over to wherever they've gone to in the world and basically taken the money with them and moved out even in the UK. And they'll probably at that point say, right, okay, we need to hold these people accountable. But the people that are actually responsible, I don't think will ever get held accountable, in my opinion.
It's remarkable how poorly the people have operated it. When you run your own business and you assume that at that level it will be the highest level of operation, and actually it's criminal.
It's a great example of contracts and leases and agreements for occupation, because there's so many things that they could have done just in the contracts to ensure that actually, if they were taking a punt on a lot of operators, but to ensure that actually they had the power to get in there. And it is just kind of a lesson of how not to do asset management, isn't it? Because actually, if they were doing inspections, they would have been able to see this what's going on. The problem is they weren't, and they doubled down and tried to buy more stock.
Yeah.
And that's where it all kind of went wrong. Whereas actually, if they had gone round and done the inspections to check that the levels of support were happening, seen that they weren't, and had things in the contract that allowed them to step in on those occasions, which most do, which they didn't, then you wouldn't.
That was probably deliberate as well, and that's the other point that we're all trying to make is that was probably a deliberate thing that we're trying to make money from it, not obviously trying to run it efficiently and run it well. And I remember back in 2021, their biggest tenant was Lotus, and technically still is Lotus, even though they've gone into administration. And I remember I had a call with them, and you were talking to people that were just saying, well, we need a year's worth of capitalization costs up front in order to sign a lease. And it's like, right, okay, well, you need to understand, well, what is that year's worth of capitalization? Oh, it goes into a sinking fund, right? Okay, so it goes into your back pocket. So you can, and I remember that stuff was going on. On the flip side, you got these aggregators that were going around trying to collect as much stock as possible. Bearing in mind, this was in probably one of the bullish times in the property market we've had in recent years.
Yeah, everybody's at home. Everyone's
and they were just picking up stock like there was no, it was going out of fashion. So, I remember that very, very clearly. But I think all of these things end up in stuff like this, really. So
we're almost
it's too good to be true.
We're almost a year into Home REIT asset sales at auction. It's September to September.
I think year and a half.
Year and a half, maybe. So we're getting into that. So there are still opportunities, right? This is people are listening to this video. Yeah, it's terrible news that Home REIT have done all this stuff, but what does it actually mean in real terms? It means that
auction end of this month, don't they?
Yeah,
all stops.
and
Make sure you view. Make
yeah,
sure
and
you go.
consistently they're going to be having properties, because they bought thousands of properties, or thousands of units. They bought thousands. So this is a well that isn't going to dry up in the next 3 or 4 months.
I mean, myself and Rod are in a WhatsApp group with someone else who was also at that level. I think they owned about 2,000 properties as well. And I think also operation, when they got to that level at 2,000 properties, they were buying stuff without actually factoring the refurb costs. So they were paying £60,000 for something that was worth maybe 90,000, but not realising these are £50,000 refurb costs.
Yeah.
And when they operate at that level, they also spent the 50 grand refurb costs when actually nothing got done to that property because they didn't have an actual oversight over it. And I think this is the problem with a market where we're not very institutionalized. We've got Granger and Mount View and stuff like that, but it's still quite a fragmented market, not like the American market that they've got with, obviously Invitation Homes and stuff. I think everyone's finding it quite difficult to actually become a dominant player in this PRS scheme unless it's build to rent or new builds.
It's hard to do it in the lower value areas because you've got a lot more stock and your control is split out, and it's really, really difficult. It's why we kind of talk about, when you're looking at kind of running a portfolio, what are those costs of management and costs of kind of maintenance as a percentage of the rent roll? Because it really starts to bite when you're doing some of these lower value areas.
We always used to talk about 10 boilers at 100 grand a house versus one boiler at £1 million a house. Not necessarily that value, but just as an example. And actually now more than ever, you start to realise that you've got 10 roofs to think about, 10 boilers to think about, and what a lot of people,
and 10 tenants to think about.
10 tenants to think about. And what people don't really realise and start to think about is how, when you buy a property, do you think how old is the roof, for example? Is it 10, 20, 30, 40 years old? How long does it have left in it as well? So I think it's all valid things from an asset management perspective. So
brilliant. Well, guys, if you enjoyed this video, make sure you subscribe to our channel. Leave us some comments below if you were affected by this home REIT situation. Maybe you benefited from it by buying some properties. Let us know what you think about what we just said, and see you in the next episode.